OECD lowers global growth forecast. Is a global slowdown coming? The global economy is slowing down, and the latest report from the Organization for Economic Cooperation and Development confirms it. The OECD has downgraded its global growth forecast for 2025, warning that the ongoing trade tensions, inflation, and high interest rates are weighing on economic expansion. With the United States, China, and the Eurozone all facing economic headwinds, could we be looking at a global economic slowdown? What does this mean for businesses, investors, and consumers? Stay with us as we break down the real impact of this forecast and what comes next for the global economy. Why did the OECD cut its growth forecast? On March 17, 2025, the OECD released its latest global economic outlook, revising growth projections downward due to persistent economic challenges. According to the report, global growth is expected to slow from 0.2% in 2024 to 3.1% in 2025. The biggest concerns: a high inflation, prices remain elevated across major economies, reducing consumer purchasing power. Trade disruptions, rising tariffs, and geopolitical tensions are hurting international trade and slowing economic recovery. A tighter monetary policy: central banks have kept interest rates high to control inflation, making borrowing more expensive for businesses and consumers. The United States economy is expected to slow from 2.8% growth in 2024 to 2.2% in 2025, reflecting weaker consumer spending and investment. The Eurozone is also struggling, with growth projected to remain below 2% as Germany, France, and Italy battle sluggish demand and rising energy costs. Even China, which has been a key driver of global economic expansion, is facing weaker than expected growth as property market struggles and trade pressures mount. Market reaction: how investors are responding. The OECD's warning has already sent ripples through global financial markets. Stock markets in the United States and Europe fell on the announcement, as investors reacted to the weaker growth outlook. The United States dollar strengthened against other currencies, as investors sought safe haven assets in response to growing uncertainty. Commodity prices dropped, with oil and copper losing value due to concerns about slowing global demand. Meanwhile, bond markets are signaling growing fears of a recession, with yields on United States Treasury bonds declining as investors move toward safer assets. What this means for businesses and consumers: if the OECD's forecast is correct, businesses and consumers should prepare for a more challenging economic environment in 2025. For businesses, companies that rely on global trade and exports may see weaker demand, especially if trade restrictions continue. For investors, stock market volatility is likely to increase, making it essential to diversify portfolios and focus on safe haven assets like bonds and gold. For consumers, slower economic growth may mean fewer job opportunities, slower wage growth, and higher borrowing costs, making it more difficult to afford big purchases like homes and cars. The Federal Reserve and European Central Bank are expected to hold interest rates steady, as inflation remains a major concern despite weaker economic activity. Could the global economy be heading for a recession? While the OECD is not predicting a recession, it warns that downside risks remain high. If trade tensions between the United States and China escalate, global supply chains could be further disrupted, leading to higher costs and weaker growth. If inflation remains stubbornly high, central banks may be forced to keep interest rates elevated, slowing investment and economic expansion. If geopolitical risks increase, such as escalating conflicts or financial crises in emerging markets, we could see a broader slowdown that affects major economies worldwide. The OECD is calling for coordinated global policy efforts, urging governments and central banks to support investment and trade while maintaining inflation control measures. What happens next? How to prepare for slower growth as we move further into 2025. All eyes will be on key economic indicators to determine whether the slowdown continues or stabilizes. United States job reports will show whether the labor market remains strong enough to support consumer spending. The inflation data will be closely watched to see if price pressures are finally easing, allowing central banks to consider rate cuts. Corporate earnings reports will indicate whether businesses expect continued profitability or are bracing for a downturn. For businesses, investors, and consumers, it is crucial to stay informed and be prepared for a potentially slower growth environment. Final thoughts: is a global slowdown coming? The OECD's latest forecast is a clear warning that economic challenges remain in 2025. While a full-blown recession is not yet expected, weaker growth, high inflation, and trade tensions could create a tough economic environment for businesses and consumers alike. What do you think? Will the global economy stabilize, or are we heading for a downturn? Let us know your thoughts in the comments below. Do not forget to like, share, and subscribe for more updates on global finance, trade policies, and economic trends. Thanks for watching. Stay informed, stay ahead, and stay prepared for what's next.